The stock market is soaring higher, the economy is going into the ground, and yet people can't decide, are we spending like there's no tomorrow or are we saving for a rainy day? All of this will be discussed here because there are so many changes and they're happening rapidly, and before we know it, we're going to get sideswiped by all of this. We just have to pay attention to the details. I'll bring that all to you today. You came here for the truth, so let me unveil that for you. I want to look at a few things today, including inflation and how that's been affecting the economy. The latest numbers for the inflation that the Federal Reserve looks at have come out, and I want to show you all about this. Of course, housing has been an issue when you can see that some areas are doing really well, other areas, not so much. And then we have to look at the recession signals that have come through and sent major shockwaves, including the bond market and everything else, seeing that effect. All of that right here, beginning with this, bond markets flashing a recession signal that suggests the Fed may be about to quickly cut rates. And that really begins with a whole new level of looking at it and thinking about it, because if you see the stock market and the general sentiment right now, it's positive. It's positive for one of two reasons. That, look, the banking crisis, that's contained, that's okay. Everything from 2020, that's past us now. And then at the same time, you have to understand the expectation here is that the Federal Reserve is going to cut interest rates. Inflation's coming down. So why don't we cut interest rates? And that's really the big question. Why is the bond market doing what it is? Why is the Federal Reserve concerned? Why is there a banking crisis when we've been told the FDIC, the Treasury, and the Federal Reserve have all said we're going to make sure nobody loses any money? There's no reason to worry, right? Or is there? Let me show you something. Here you can see the key inflation gauge rose 0.3% in February. That's less than expected. And that means, of course, that interest rates will not need to rise higher, considerably higher, because they're looking at this. And they're going to say, okay, things are starting to slow down. If you see these levels of inflation, depending on where you look, like that's the core PCE inflation rate. This happens to be real estate. It's going to really depend on where you are, depending on what market you're looking at. Stock market, bond market, housing market, crypto market. Each thing is going to have its own level of inflation or problems or issues or fantastic things that are happening. In this case with real estate, it's interesting because you could see the West Coast actually suffered dramatic losses, whereas the East Coast performed much better. It's just really strange to see that. It's never really been like that. And you could see San Francisco, San Jose, both down over 10%, whereas Orlando and Miami are 10+%. And that's interesting just to see that. And, at a time in which we've had so much difficulty, it really all depends on where you are, and maybe you're trying to afford a home. That's not very good if you're buying in one of these places that has been increasing. However, maybe you were looking for 10% off from that peak. Well, in some places, you might be able to get that. Bank of Canada sees quantitative tightening ending by 2025. Yes, that's right. They are way too early on the talk of normalization of the interest rates. This is the type of thing that we see frequently, and of course it's a big lie because they're suggesting that there's not going to be a problem from now until 2025. That's what they're saying to you. And obviously that's not true. But that's where we're at. These are the type of things that central banks will say because they want you to think that everything's okay. They want to do this, and it's all part of their forward guidance. And that basically means what they plan on doing at some point. Like, here's what we're going to do. Letting you know what's going to happen so that the market begins to price that in even before the action is actually taken, even when it's ridiculous. That's just the way it goes. Okay? Now, this is where the changes come in. A lot has happened. And one of the things is the 4-day work week. You've heard a lot about this, but they're suggesting maybe we should go about it. And maybe that's going to be a good thing because, hey, if we can't find enough employees, if you start to shrink this down, Maybe that's helpful in some situations, or maybe it's going to hurt us in other situations. It depends on the type of job. Are there too many people? Is there not enough people? Is it, in the industries that are overwhelmed right now, or maybe they've been hurting right now? It really depends. So it can't be something that's a blanket thing. My opinion on that we'll discuss in a moment, but another aspect is Social Security. Many people have been dependent on Social Security, and I've heard from you directly. And think about this. Right here and now, the reserves are projected to run out earlier than forecasted. So what do you think that means? At the same time, we have the potential of a multipolar currency world coming through. We're going to discuss all of that right here in this segment. A 4-day work week gains lawmaker support in some states. So we don't know what's going to happen exactly, but there's a lot of things that could be coming up, and it could be on the state level. It could be, on the national level. Who knows? Who knows who will actually go ahead and implement this? It's not the first suggestion of this, of course. For me personally, I work 365 days a year. That's the way I approach it. But I don't expect everybody to be wanting to do that, of course. I think it's important that we work a lot. That's a fact. But we should be working at the things that we at least have some interest in, okay? Shouldn't be something that we hate. Shouldn't be forced to work something that we hate. But we don't have to necessarily really enjoy it. That I think is, that has to be your passion. I don't necessarily agree with that. But in this case here, a 4-day work week, I think there's going to be a great divide in between the people that are doing a 4-day and the people who are willing to do 7 days. I think we'll see that. And I think that's going to be a big problem for a lot of people. If an employer says, I got a guy who's going to work 4 days, and that's the law, no pressure, that's totally fine. I got this guy who's working 7 days. Who do you think is going to be favored? It's just the way it goes. Prepare for a multipolar currency world. The US dollar still dominates the debt market, but some niche-sounding data suggests things could be set to shift. And the only reason I brought this up, I've talked about this in other videos, is that what we see right now with China and what they're doing really has an impact, because if the US doesn't have its monopoly, you got to realize how significant that is. Like, everything that's going on in the United States is really hinging on the fact that the US dollar remains supreme. And that could be changing. The entire economy could be shifted because of this fact. And it doesn't mean US dollar goes away, it disappears, it's gone. What it means is that it's no longer like the number one top spot, nothing even close. There might be a bigger balance in there. Maybe the US dollar is, let's say, instead of right now today, 59% of total reserves, let's say it's 40% of total reserves. And you got, other currencies in there, 20%, 20%, 20%. And that would be a very big change from where we're at today. Very big. There's a lot of changes coming right now. And, a lot of people are focused on the wrong things, in my opinion, but that's the way it goes. Social Security reserves projected to run out earlier than expected. Slower growth, higher inflation to challenge the program's finances, just like any pension fund, just like the 401ks, just like your mutual funds. They give you this idea or ideal of what they'd like to have, and it doesn't meet up with the expectations. So, just kind of like a blind date. Probably not what you had in mind. Okay, so this is the kind of thing that, unfortunately, for a lot of people relying on it, this is going to hurt. It's really going to hurt people. And so that's why you got to be prepared. That's why I talk about the pillars of prosperity. Talk about that all the time. That's the preparation that we need. And I hope that people will get on that as soon as possible. Okay, are big profits keeping prices high? Some central bankers are concerned. And this is part of it. I mean, I really think for some people, like, what exactly are they trying to get at right now? Is it all about profits? Is it? Well, there's concern here. There's no question about it. It comes at a time in which the nation's top egg producers are reporting a significant increase in profits. Look at this. Can you see this? It says egg producer reports 718% increase in profits. So while you were paying more and the egg prices were going out of control, I was showing you here on the channel, you've got a 718% profit increase. That's fantastic for that company. Probably pretty good for anybody who's got those shares or has a percentage of that company. But it's not so good for the consumer. And that's what happens many times. And they're able to do this, they're able to get away with it, and there's really no repercussions for this type of thing. And that's the type of thing that will happen, and you got to be able to withstand these shocks, even if they're temporary. And that's why I say people need to be prepared, okay? Because a lot of things are changing right now. And one of them is this right here. Most US banks are technically near insolvency and hundreds are already fully insolvent. That's according to Nouriel Roubini. Now, we've heard from Nouriel Roubini before. I'm sure you have. And basically, we don't have to necessarily take what he says. We can take it with a grain of salt if we want, right? The point here is that things are changing. What we had before of these super low interest rates ultimately presents a problem in this time that we're experiencing with higher interest rates. If they decide to bring interest rates down, they actually cut interest rates, you know what's going to happen. Inflation rates are going to go up. And that is going to be so devastating to people. You think, doubling of your egg prices is bad? Just wait until the second wave of inflation comes through. That will be absolutely devastating. Okay, so we can hope that they will leave interest rates elevated for this period, and that would have some level of impact on, what they can do about it. I don't know. We're looking at a very unusual time. I just hope that people will be more prepared, but it doesn't look like it. That's the unfortunate part. Most people are just go pedal to the metal, just like much of the big investors and so on. That's just the way I see it. Anyway, if you want to become an insider to get the video of the day every single day, hit right here or themoneygps.com. Scroll down to the bottom, fill in your email address, and I'll get that to you each and every day. Take care.